So welcome everybody. Welcome to the Asia PropTech Beyond 2022 conference. I'm Paul Chen, co-founder of Asia PropTech. And today we are going to talk about real estate tokenization 2.0. And I have three wonderful guests here today. I have Yael, Tamar, CEO and co-founder of SolidBlock, and Claus, Skanning, CEO and co-founder of DigiShares. And finally, from our locally within Asia, we have Pham, CEO and co-founder of RealBox. So welcome everybody. Okay, so to kick this off, why don't we just do like a quick intro of our panelists? Give a quick intro of yourself, talk about your company and services.
I'm Yael, Tamar, CEO and co-founder of SolidBlock. I came to the area of tokenization from finance. I had about 15 years in finance, starting as an analyst on Wall Street, then M&A companies and Big Four like Ernst & Young, and then structured products. And I touched real estate throughout my career, more on the marketing side or analytics side, as well as an IPO that I was a part of at Ernst & Young for the largest real estate group in Israel. And at a certain point in my career, I switched over to marketing, opening an agency, and then I discovered Bitcoin and crypto as the way to pay all the people I had all around the world. And I fell in love, first of all, with the ease of transactions. And then I realized that this technology can be applied to any transactions, and specifically for assets that are illiquid, which is one of the largest industries in the world, specifically in real estate. And so there I went down the rabbit hole and joined SolidBlock in 2019. That's about it. We were at the beginning. We facilitated the issuance of the Aspen coin, which was issued by Elevated Returns. It's now trading on T0 ATS. Since then, we've done quite a few successful projects, which were commercial, mainly commercial real estate projects. And now I'm looking forward to exploring with you guys where the industry is going. Yeah.
Claus, let's go to you. I know that you're making a lot of money for a lot of people right now, right?
I hope. Yeah, my name is Claus. I'm the CEO of DigiShares. I have a background as a researcher. I have a PhD in computer science, no finance background at all, but coming more from the other side, the software and the IT side. I've been an entrepreneur for many years, starting 4 or 5 companies so far. And initially I was in the AI space, but about 5-6 years ago, I left AI and went to blockchain because I think it's more exciting. I also bought 1 Bitcoin back in 2014 that I still have, actually my best investment. And then I sort of came sideways into the tokenization space about 5 years ago. We started another project where we needed tokenization as a technology. We looked at the providers in the space at the time and didn't see anything really nice. So we decided to do it on our own and founded DigiShares about 4 years ago, and yeah, developed it since that point.
Cool. Great. Thank you. Alex, where are you, Alex? Are you in Australia or Vietnam? Where are you today?
Thanks, Paul. So I'm in Vietnam at the moment.
Okay.
So I spent the last 11 years based in Australia, working mainly for real estate services company. So my job was trying to find funding sources and capital raise for property companies in Australia, around the world, in Singapore, Hong Kong. And I came across the REIT model quite often, the real estate investment trusts model quite often. So in 2020, I decided to move back to Asia. So I moved to Singapore, setting up the company there. But we've got the development team in Vietnam. However, the headquarters is still going to be based in Singapore because of the more friendly jurisdiction for blockchain company at the moment. So yes, so I set up RealBox, which is a real estate tokenization platform. So we provide a marketplace for the trading of secondary tokens, which are backed by assets. We can call them vault tokens, or we can call them security tokens, which are still up for debate, and hopefully we can have that answers by the session today. Thank you.
Okay, cool. All right, we're gonna get into it now. Okay, so we're gonna start like just like pretty easy question. So just for our audience that may not know about tokenization, like can somebody explain what exactly is real estate tokenization and how is that different from like a REIT or like private equity real estate? Who wants to take that?
I'm happy to get started with that.
All right.
So everybody who's invested in real estate will know that you can either buy an asset. Well, most people invest at least in their home where they live, or a home that they own. You know, get a mortgage and buy a house. That's one way to invest in real estate. And then the way out is usually, or the way to exit is usually to sell it at a hopefully at a profit, right? Or rent it out. So it's a simple concept, right? Sell, rent it out. People that go further and invest in REITs, right? They invest through exchanges or, their brokerage, right? Brokerage of their bank. They will buy a piece of a public real estate fund that buys and sells real estate professionally, and they will get some sort of a dividend for their investment. And they can usually sell it very quickly on an exchange or, through their broker, right? So that's a public REIT. Now, there are other options that exist for investing, like crowdfunding or accredited investor platforms online, which have sprung up with the Web2 development, right? All these online apps where you can buy a piece of real estate and then hold it until the owner decides to refinance and get some dividends and interest in the process. So those are the options that exist to this date. Now, these options are limited or limiting because maybe you don't want to invest in a house because you don't have enough funds to buy a whole house, a whole asset. And rather you would like to invest fractionally, meaning, participate in a success of a business operation, which involves real estate, but you cannot afford to keep your money there for many years, right? For someone else to decide when you can exit. So tokenization is basically a merge of two things. One is securitization, meaning you can buy a security, a piece of an asset, a single asset, not a huge fund that someone is managing and taking a lot of management fees, overhead, and stuff like that. You can invest in a specific asset that you like, and not only that, you can also exit or sell these shares, these securities, whenever you want. And why are you able to do that now? Why are you able to sell those? Because of the technology that records all the transactions on the blockchain, and individuals can do and sell shares or securities without intermediaries, without the asset owner's permission, without an exchange, without a fund manager. So it creates better opportunities, better, higher income for these investors, and a lot of new financial models, because now you can leverage these interests, right, and go borrow against them, and you can now combine them in a better REIT, like a token REIT. So it opens a whole new world of new finance. But in the bottom line, it's just basically investing in a project where you can sell or leverage your investment.
Okay. So, we've talked about this for a while. I mean, I remember like a few years ago, like there was a whole ICO craze, and then like people talked about fractionalization. There were all these projects. They raised a bunch of money, and then like a lot of them kind of fizzled out. So have we like gone through the hype cycle already? Like where are we in the cycle? And what kind of assets are tokenized now? Like,
I'll take that maybe.
Okay.
Yeah, I think we are actually going down the hype cycle into the throes of dissolution. I have to say, I think our industry got started with STOs, which was seen as the replacement of ICOs. Since I think most of us moved away from that term, and now we are sort of calling it tokenization. And I think now the focus of the industry is really to move away from the pioneers and the early tech adopters into the mass market, and try to make sure that tokenization is understood, is appreciated, and is not sort of demanding real estate developers to expose themselves or adopt a crypto understanding or crypto sort of use within their business, but actually try to turn it into a more sort of general purpose practice, something that can be done by everyone and should be sort of the standard way of doing things. So I think that's hopefully where we are in the industry. I think we've seen a massive interest from the seller side, the real estate developers, the owner operators, but we need to develop the buy side also, and that's, I think, what will take a lot longer compared to the other side.
Okay.
But,
Yeah, I just want to add something there. I think you're right, Paul. We are, and also Claus as well. So we're entering a more quiet downtime of the crypto markets. However, the statement is right and wrong. So yes, there's less interest from the crypto natives interested in investing in these projects. However, what I'm seeing is actually there's an increased interest from traditional businesses taking advantage of this downtime and try to develop their own projects, and also try to make that connection between real assets and virtual assets, or real assets and the blockchain economy. So actually seeing an increase in interest from traditional REITs, traditional real estate companies getting a lot more interest in this field.
Okay. So what types of projects are out there now? Because like sometimes like I'll go to different tokenization sites, and then I'll see like a single family home in like Detroit, like, I'm not going to buy that. But what kind of projects are out now? Like, are they like commercial buildings? Are they funds? Are they mostly development projects? Like, where are you seeing the action right now?
I wouldn't knock down the single family though.
Okay.
I mean, there are quite a few out there, and I'm not sure that people will necessarily trade them, right? So there's not such a huge blockchain advantage. But on the aggregate level, if eventually these tokens get combined, that could create, in a good way, that could create an opportunity for trading as well. So if the companies that are focused on the single family, like I guess realty or roof stock even, right, that are starting to use blockchain with Figure, it could be an interesting model, but it's a different model than commercial, right? Commercial market is offering a lot of other opportunities. So what we see is a big development in two segments. The first segment, like you said, would be single family, but it's hard to get to a big volume with single family, right? And so far, like Realty has tokenized a lot of tokens, but all of them are, $200,000 to maybe $1 million. At the same time, we're seeing a lot of banks and financial institutions doing huge tokenizations, trillions of dollars, usually for the purpose of saving funds on securitization. And it's working. So HSBC did a study where it showed that tokenization is saving 30 to 60% on security issuance and 90% on reporting. Why? Because blockchain is the best accountancy solution ever, right? You can't miss anything. So, so these large institutions, because they want to stay competitive, they want to use blockchain for transactions, a no-brainer for them. Like, I would say for the adoption of blockchain is super mainstream. If you look at like financial institutions, because for them, they have a lot of resources, they can implement new technologies, and they're not too concerned with costs of technology like smaller real estate asset managers and owners, right? So at the end of the day, we're seeing kind of this huge tokenization, but not for the purpose of trading necessarily on the institutional side. And usually they exist in silos. They issue tokens on their own blockchain, or maybe they use JP Morgan's Onyx, and then they don't make those tokens available on public markets, right? Somebody takes them off the shelf, some other institution. So obviously it's questionable whether or not this is helping anybody, right? Like to democratize the market, if that's the purpose of, or raison d'etre for our companies here, right? Mm-hmm. So what we need right now is the middle solution, right? So platforms that will provide real value, the real liquidity that is needed, right? Maybe not on the investor side, am I gonna buy a piece of a house in Detroit, then sell it, and buy a piece of a house in North Carolina, right? Not sure. Or rather, provide real value for liquidity to the asset owners who really need that liquidity all the time through additional leverage, solutions outside the banks, and solutions that are flexible and also are on par with risk management and the way that they view and understand liquidity, risk, and market management. And so once that happens, the market is going to reward us with a lot of projects in that mid area, right? The projects that are $50 to $100 million. And I've seen recently a few pop up that look interesting, that actually in Asia, right? So there are a few that are on crypto SX exchange that I've seen. We at SolidBlock, we've done, we actually issued a coin for detox centers in Florida, which is now on a green light poll with MakerDAO, for example. And that use case will show the real value of real estate tokens.
Oh, cool. We have like a lot of like real estate owners here. Could somebody describe like if they wanted to tokenize, like what is like the high level process of tokenizing? Do they need a license? Like where do they list? Like how do they go about doing it?
You want to take it, Alex?
Yeah,
I
might just add some notes here first. So I think different countries will have different regulations and requirements as I figure it out as well. So Singapore is very different to Australia and Dubai and other countries as well. So, but I guess in a general sense, there are two ways you can tokenize an assets, and both legally and practically as well. So one is you can tokenize the interests in the entity that owns the asset. So, for example, there are projects that are tokenizing the share of the equity of the SPV or the company that owns the assets, right? So that's one way, and there's that direct connections between the token, which is can be called a security token, and the ownership of the assets, the underlying assets. However, there are pros and cons to that, which I will describe later. Additionally, we know that there's another way of tokenizing an asset is instead of tokenizing the direct interest in the assets, people would create a mirror assets, a mirroring asset, very similar to that assets. However, it is technically a virtual asset. It can be called an NFT or a virtual asset, but mirroring that asset. And then they would issue tokens on the virtual asset or the mirroring assets, right? And there is no direct relationship between the ownership of the tokens and the direct ownership of the underlying asset. However, a lot of the operations can be based on reporting, on trusts as well. So those are the two different ways. So when you do that, it's not called security tokens. It can be called NFT tokens or any other names. However, there will be lack or less regulatory recognition of NFT tokens versus security tokens, and with the direct relationship. So that's sort of my my understanding of how the world works at the moment. Other people might feel free to add on to that.
Can I add to it?
For sure.
Yeah. Yeah. So the way we typically do it is that as Alex has said, we tokenize the shares in the company that owns the property or the development project. So basically, within the system, the tokens are linked to the legal representation of the asset. The company itself is specified within the system, along with a number of shares, share classes, and so on. And you can basically push a button to mint tokens corresponding to the shares. Then you get the tokens into your wallet. They will be security tokens because they are tokenized shares, and you can use them for various purposes, right? So you can offer them for sale, you can do crowdfunding, you can enable them to be traded, both within our system and within our system, other systems, right? And we can also facilitate integration with exchanges. For instance, you can get them listed on exchange, and longer term also use them for DeFi lending. So that's sort of,
Okay.
in a nutshell, how it's done in many cases, I think.
Okay. What's a typical profile of a company that would want to tokenize?
So
Is
we've
there one?
spoken to
Yeah.
we've spoken to probably 2,000 or 3,000 asset owners over the years, because we've been around for a while. And initially, developers and sponsors, which is basically the name for a real estate entrepreneur, they initially thought of tokenization, and some might still do, as this magic crypto money or magic blockchain money that will pour once you issue a token, which turns out is not the case, right? You still, crypto investors are a little bit on the sideline, at least in the Western world. I think in Asia it's different. And as far as the traditional investors, they might have, they need to learn about tokenization. So the makeup of the asset owners and managers has changed. And like I said, we see a lot of institutions tokenizing because they learned finally, after 3 or 4 years, they learned about the technology and the benefits. So we see a lot of that. Now, some larger asset managers that understand the benefits, and they're not necessarily jumping on board because they don't have the tools, and they need to have risk management tools. They need to have analysts who understand what's going to happen with this investment if a market does this and that, right? This is what exactly happened with crypto a few years ago. Crypto, like in big asset managers or financial institutions, were dying to jump on the crypto bandwagon and start buying crypto, but they had no way to custody it, no way to analyze it, no people internally who understood anything about it, right? So they had this revolution or evolution where they hired people, they got tools, they ensured security, and lo and behold, every institution started using crypto, and actually real estate went out the door as this, the alternative investment of choice, right? Alternative investment class of choice, and crypto came in. So the same thing is going to happen with the tokens. And so a lot of asset managers, larger asset managers for now, are establishing all of those things. And my prediction is that within a year, once they have all those tools, the market will take off, and that will kind of wake everything up. So I'm not sure that there's a trough of disillusionment. It's just not enough value for now in tokenization for the players that are likely to adopt it today. So that's where we need to bridge the gap between the tech and who actually is going to use it.
Okay.
Yeah.
What's the difference between like tokenized real estate and crypto? Are they like interchangeable? Are they the same? Like, what's the difference, if at all?
Big
I think I
difference,
just want to add some of my comments here. So yes, there are differences and there are similarities as well. So a tokens is basically an asset or representation of direct or indirect ownership of an underlying assets. However, crypto is, for me, it's more of a currency, a mean of transaction. So we use cryptos like BTC or USDT to buy these tokens, and then when we sell these tokens, then we'll convert it into other cryptos. However, there are hybrid cryptos that are acting both as a mean of exchange and also a representation of the underlying assets as well. So one example I can give you is actually USDT is the same time a crypto and also a token as well, because USDT actually has some indirect relationship to the real USD that the project owner put in their bank accounts. So in some way, they do have some underlying assets to back it up as a stable point. So yes, I think the same thing with real estate tokens as well. They could be just a token, or it could be a hybrid of a crypto and a token representation of the underlying assets as well.
Interesting. So how would you value that? How do you value it? I mean, like in real estate, yeah, I get an appraiser once a year. I can get a valuation company I value, but how do you value like a security token?
Same way.
That's
Same way.
depends if
Claus?
it's traded. Yeah, sorry.
Same
I
way,
think
right?
it's the
So
same way.
Wait, hold on,
if
Alex,
it,
hold on.
if it
Hold on,
if it
Alex.
if the security token represents the tokenized share in the company that owns the real estate property, then of course you have a direct link to the value. And the appraised value is used also to assign a value to the security token itself. So initially, when it's minted and it's sold, right, you have that value to follow. Then later on, if it's traded, of course, you'll have the traded value to indicate the real value. So it's pretty simple. Tokenized share is exactly like a share.
Okay, got it.
I just want to add here. So before we talk about valuation, we need to distinguish between the two different markets. So at the asset side, you have the asset market, and then you have got the token market, which represents the interest in that assets, right? And both of these values over the medium to long term, I think you're right, Claus, as well, that they should move in tandem over medium to long term. However, over the short term, I think there might be some deviation. There would be some deviation because these two markets are subjected to different supply and demand dynamics, right? So in the asset market, we've got supply of assets, demand of assets, and for the usage of the assets. And then on the token market, we also have supply and demand of the tokens as well. And this could happen in a way that the token price might be sold at a premium or a discount to the asset value, right? However, having an efficient market, if we are going to have an efficient market, that differentiation will be corrected very quickly. So the movement's not going to be as significant as other types of shares. But over the medium to long term, I believe, yes, anything that has an underlying assets, right, will move in the same direction.
Okay, great. Like, how secure is it? Because, like, we hear stuff about, Bitcoin getting swiped from wallets. I mean, how secure is that?
Much more secure, right? Because most security tokenization is done using standardized audited security token protocols that also give you the ability to burn and reissue tokens if you lose the access to them, right? So since we're talking about securities, it's required by law to be able to reissue the tokens to the correct owner. So it's first off, it's almost impossible to steal them because your wallet needs to be whitelisted to keep them. Second, if you did manage to steal them, we could always burn and reissue to the right owner. So this is when you're talking about security tokens, right? It's simply required by law. So it's a much more secure paradigm and concept we are in. Of course, we are also facilitating payment using crypto, right? So you can still have situations where the clients or the issuers have wallets with crypto that is hacked. So we are also, of course, influenced by that.
Okay. And who are the buyers who are the investors right now? Like, is institutional money getting into the space? I know, Yael, you talked about how there's institutions that are using blockchain or using tokenizations to manage these investments. But who are the investors now? Is it like high net worth? Is it like mom and pop investors? Are these like accredited, non-accredited? Like, who are these investors now?
Most of the projects that have raised with security tokens, there are two types, right? So there are retail level investments, and in those, individuals that just want a piece of real estate somewhere and get some, just like crowdfunding. That's what we've seen. And these are usually just real estate companies that are using, blockchain to record these transactions as opposed to Excel spreadsheets or whatever, right? The trading aspect of it is not taking off because nobody's really trading single family homes or tokens that are small. Because if you look at even at the public market and over-the-counter trading, projects or companies that are less than $50 million inside are just not trading. I would even go further and say $200 million inside, right? There's just no liquidity for those. Liquidity is in the big projects and public companies and funds. And so this is just the makeup of an investor just wants a piece of real estate and maybe they can buy it with crypto and that's awesome. And so the other side of the coin is asset managers that already have investors, and these are either accredited or funds or their existing investor base. And so they're tokenizing, and then they're bringing their investors who are just using the system as a better way again to record transactions and then get some liquidity. That's what happened with the Aston coin, by the way. There were 22 initial investors. A lot of them came from Asia, like Hong Kong funds, for example, that put money into the token, and a few accredited investors that were close to the issuer. And there were 22 of them initially, and then it was listed on T0, and that blew up to over 1,000, right? Because T0 has their own users and investors that wanted to participate. So that's a perfect example of how it should be done. Initially you bring investors that take the risk, and then on the exchange, once the project is live and if they see that it's producing, income for people, other investors come in. I don't see, frankly, a lot of retail investors, let's say, to participate at the very initial stage.
No, not yet.
Okay. So
I think just to add to that, if I may, I think we will see the same kind of adoption curve that we've seen for retail stock trading since the 90s, right? People have to understand, the retail traders have to understand that it's now possible for them to invest into real estate, and they have to understand why they should do it, and they have to get some exposure to many different types of assets, also in their local neighborhood, right? And that's going to take some time to develop.
Okay. And okay, so what I'm hearing is that most of the investors, they're not retail, they're maybe more sophisticated investors or existing investors into like a fund right now.
Yeah.
That's what I'm hearing. I always had this impression that, and like a lot of real estate developers ask me too, hey, Paul, I hear like, tokenization is really good. It's like a super easy way to raise money. Is that really true? Like how quick is it to raise money, by tokenizing and crowdfunding?
It takes about the same time if you tokenize,
I think
if you don't tokenize. Yeah.
If the developer comes in and say this is an easy way to raise money, it's not about raising money. I think it's about creating new products that suit the demand of users, the demand of token holders. I think the focus for these developers should be focusing on creating good products for these users rather than trying to get or suck money out of the markets. I think, yeah.
Okay.
It's about getting more digital. I would say modernize, automate more business processes for the real estate firm, but it's also to fractionalize, become able to sort of reduce the ticket size and get access to new funding channels like retail investors and so on. But it's not easy to cultivate, I would say. And then it's about getting more liquid, right? So making your asset tradable.
Okay.
But it's not necessarily easier to raise funding for a project that's tokenized compared to one that's not.
What I'm hearing is that it's not whether it's tokenized or not. It really depends upon the quality of your project. That's really what it comes down to, and how good that product is.
Yeah, but you could say that if if the project you are proposing to the investors is more liquid compared to other options they have, right? Then there should be an advantage.
Okay, so just going to liquidity now. For the different sites, I've seen like some sites saying, hey, we have an exchange, or you can do like trading. But I struggle to find like one place where I can just see like a bunch of projects and struggling to see liquidity, or maybe I'm looking at the wrong places. Could you all like shed some light? Like, am I wrong to say it's really not that liquid yet, and it's getting there? Like, what's happening now?
It's let me start. It's going slow, and I think you're right to not see the liquidity yet. I don't think that any single exchange exists where you have a lot of liquidity entirely for security tokens or even for real estate tokens. You have T0, I think, which is the leader in the world, and they have monthly volume around 10 million US or something like that, which is very low compared to what you see anywhere else. But I also think it's coming, right? So it's growing relatively fast, and we are getting more and more exchanges, and we are getting more options for liquidity. Just fractionalization in itself adds liquidity to an asset, right? And just the bulletin boards and sort of the ability to make like a peer-to-peer trade removes a lot of friction and makes it possible to trade within each individual project or fund itself, right? Which is already a huge advantage compared to the past. But we are not seeing yet big exchanges with a lot of liquidity.
Okay.
Yeah. Okay. I think it's the same with any other crypto products. Initially, there was very low liquidity, but until we've got large enough markets, as many projects doing it at the same time, then we're going to have a market that is large enough for a pool of liquidity. So the crypto market right now, like the likes of Binance and other exchanges now are seeing that huge liquidities because there's many projects being listed on the platform. At the moment, I don't think we have got that threshold yet, but you know, we've got to start somewhere. We've got to start somewhere and start building that up.
Okay. All right. Get your crystal balls out. Okay. When are we going to find that liquidity? Okay, like a decent liquidity. Is it like 1 year away? Is it like 6 months away? Is it like a few years out?
Sorry, my crystal ball is when the larger exchanges, crypto exchanges, start looking at securitizations and asset-backed securities. That's when we are going to see a huge amount of liquidity because you know, I've been talking not only to the real estate developers that are wanting to raise money and get access to crypto, but there are crypto exchanges wanting to build new products that have real values and real underlying asset backs, right? And a lot of them are actually talking about you know, building these NFT real estate NFTs exchanges to bring more products to their users. If those exchanges are gonna get into this, they're gonna bring the huge fan base or huge user base that will create this this security liquidity for the market.
Right. You got a time frame? Gonna put you on the spot here. You got a time frame?
Probably when Bitcoins or BTC is starting to go back to 50, 60,000. I don't know. It's a crystal ball.
When is that?
Okay. Claus, what do you think?
Yeah, I think I agree. I think it's going to take a couple of years, 2-3 years before we see it. It's not going to come really fast. I'm afraid. Takes a long time, and it's about educating. I think really the retail investors and getting them into the space. Yeah.
Okay.
I think we can relatively easily approach the DeFi users and the crypto users, but the outside general population, getting them to invest into real estate as part of their normal sort of portfolio planning, in addition to what they're already doing now, investing in stocks, it's going to take time.
Okay. Yeah.
So what I can add to this is the following. If we look at the REIT market, which started, right, public REITs in the 1990s, and in the first 2 years, I think we only saw a couple of 100 million in general of REITs being issued on the public market, and the same thing is what we see right now in security tokens in real estate. You know, if we look at FTO Markets report, we see a few 100 million that is being traded. I would probably say that's the accurate description of the market right now, although a lot more has been tokenized. But if you're looking at tokenization from the perspective of liquidity, rather than just facilitating transactions, which is different ways to look at it, that's your market. If you're looking at it from the transactional capability, you could, you know, find that it's over $70 billion large, like if you count the transactions of LaSalle that is powered by RealBox, right? So this is all dubious. But if you look at liquidity of the REITs when they just came out and they were listed on NASDAQ, it wasn't that high either, because nobody, you know, so it's a new product, nobody knew about it. The institutions still didn't have ways to evaluate. So I think we're actually at a really, really good spot. If you look at the evolution of other financial instruments, And we're at a really good spot with security tokens. And in order for it to really go off from the liquidity perspective that you're looking for, the liquidity for the LPs, for the investors, for that, aggregation needs to happen. There need to be a lot of tokens, literally thousands of tokens that are commercial and large, that people from Australia will look at an Aspen coin, or will look at an Empire State Building, will look at whatever, and they say, wow, I really want a piece of that, and not a single family home in Detroit, right? But they will look at a portfolio of single family homes in,
Right.
I don't know, Southeast US, right?
Right.
So that's where you'll see a lot of liquidity. You have lots and lots of tokens that you can aggregate, put together in an index, stick on some real stock exchange where you have a lot of liquidity, or have a system where exchanges talk to each other and can sell to one another, right? Which is easy to do with blockchain. So 2024 is my prediction.
All right. If I had a prize, I'd give it to you because you're the only one that named it a year.
So make sure that we stick
It's in our
around.
business plan.
Stick around till 2024, Paul.
It's around the corner. Okay, so if I want to tokenize something, which jurisdiction should I go to? Like, which is like a friendly, easy jurisdiction? Like somewhere in North America, Europe, Singapore, Vietnam? Like, where should I go? Yeah, top place, single, like two or three words. Like, where should I go?
The US, best
US.
place in the world, easiest jurisdiction, lots of traction, lots of business, the most liquidity.
Okay.
Yeah, the US actually does have Delaware, or in general the exemptions that we see in the US are indeed, up until now, have made it the best jurisdiction, specifically Delaware, and also it's a tax haven. So, and you can even preserve tax benefits for American citizens, of course, or American tax residents.
Okay.
I've heard recently from a few legal firms that Cayman has kind of come out of the limbo. I have to double check, so you guys, frankly, but if anybody here is in the legal space and wants to double check and see, because they were stuck in some things like compliance requirements, and I understand that they have resolved, and it might be an up and coming jurisdiction for tokenization. So you can always structure it in a way that you have a corresponding rent fee in the US and so on and so forth, which means basically an exemption regulation. So I invite everybody to kind of recheck this information, because things are very fluid in compliance.
Right. Okay.
Alex? Yeah, I
Alex?
agree. I think things are very fluid at the moment. Again, my safest bet would be the US as well. However, there are other jurisdictions that are catching up. Singapore, Dubai, even Switzerland, and even my own country, Australia, are now looking at regulatory framework for token market, for token projects being there. So I think it's a watch this space, but I think the US is now the safest bet and more favorable location for many projects.
Cool. Okay, we're about to get to the end of our session. I'd like to just close this off. Any closing thoughts? How do we get the market going? Any advice for companies that are looking to tokenize? Any parting words? Alex, why don't you go first?
Yeah, I think it's first of all, it's we similarly to any new financial instruments, the first step is to get the awareness out there. An event like this is greatly appreciated, and to provide education, to make sure that people understand what it is, the risks, the rewards associated with it. So we're moving in the right direction. But then I think the second step is to have a set of standards or standards across the world. So people, when they have projects, tokenizing projects, then we can create that trust among the users. Right. So I think those are the important things for us as an industry. We'll need to deliver.
Okay. Yeah. Yael?
So anybody who wants to tokenize needs to understand the benefits and if it's a good fit for them, right? So I would say the test for a fit would be do you have a good list of investors and LPs already, right? So don't expect the token to be the magical fundraise. You can have a lot of benefits with blockchain in transactions, in recording transactions and distributing dividends and interest and providing them with pathways for even leverage through DeFi. But you need to be able to allocate some time and resources, not very big resources. It's not so expensive to tokenize, but definitely allocate, some compliance resources. So, companies that are kind of running after money all day long and don't really spend time and thought towards technology, they won't feel comfortable doing it. Even if we tell them a story, all of us here will tell them a story. We're end to end. We're doing everything. Just come, put your asset. It's true, but they need to feel confident and comfortable doing it, right? So only people that kind of have a grasp of technology have that, or companies that have, innovations officer or have implemented technologies before, right? Technology transformation. What we're talking about essentially is digital transformation of whatever they're doing now, kind of manually or with outdated tech, moving that to Web3. So I would say, let's make sure that we're a good fit. We'll give you everything we got, but you also kind of need to be ready to get there. So nobody is wasting your time.
Okay. Claus.
Yeah.
Final remarks. I agree very much. It's about education and it's about explaining the value proposition, even without the easier ability to raise funding, to understand that and to understand the benefits that tokenization can still give. And then I would say we mostly work with smaller and medium-sized real estate developers around the world. The larger firms are more conservative and careful about entering the space, but from my perspective, they need to be exposed to it. They need to understand, and they should do like a pilot project at least to try to understand what it's about and to see how it can give value for them.
Got it. Thank you. That's a wonderful closing. Thank you very much. So in summary, I think positive. It was slow going in the beginning. Things are evolving. Positive. 2024. That's the key, right? That's the key. But and a big part of it is education. So speaking of education, down here, I provided a link to the Fibre industry report. So for anybody that wants to learn more about tokenization, you can go to Fibre. Fibre, here's the website down here, and you can download the industry report. You can also reach out to our experts here today, Claus, Skanning, Yael, Tamar, and also Alex Pham. So you see the QR codes right there. So please, please, please reach out to them with questions. And I'd like to thank you all for being on this session today. I learned a lot from you. I'd like to have a session next time about tokenization meets DeFi meets Web3, if we can. All right. So thank you very much. And
thank you.
Yeah.
Thank you, Paul.
Have a great day, everybody. Thank you for the time.
Thank you, everyone.